Good evening, all. Ira Epstein of Linn Associates with your agricultural wrap-up, and this wrap-up is for Thursday, the 16th of April, 2020, and we're about 5:05 p.m. Whoa, the market's just reopened. Look at this monster rally in the stock market. People are hearing a three-phase plan by the president. You know, the funny part is it was known during the day, and the market didn't react. Now as the president's talking, and he's going to release what that plan is, and it's a guideline for the individual states to decide and maybe use it. They don't have to use it. The president is not a king, as was well said recently. He is the president of the United States. The states make up their mind what they want to do in this. Of course, he always has that power of the money that the states get from the federal government he can make difficult. He won't. This is going to be a concerted effort, and the market likes what it's seeing, at least early on. Gold dropped on the news, but now it's coming back. Silver and copper are jumping, and I always watch Dr. Copper, as it's called. Is that market going to do something with this? Energy prices up a little bit as well. So let's go, if we could now, to our soybeans. And they're acting terrible. For the week, the market's down 26 3/4 cents. And as much as our Ag Secretary Perdue is working and trying to get farmers money, you do know this is a long, drawn-out process. It's got to get through Congress, and as the farmers know too well, the government's rarely there to save them. They saved them over time when we had that bounce out of these lows, and if you didn't take advantage of some hedges in the beans, well, all I can say is maybe shame on you, because you did get the markets back up there as farmers. Now, you're drifting back down. You can see the momentum in the market, and you can see this last break, we've now gone from 877 to 845, and I'm concerned because now that the market's reached down here, it's starting to accelerate again, and that could lead to this challenge of the 830 level. Is the market trending on the way down? The good news is it's not. It's just falling. It's a vertical price rise with a higher high and a lower low. If we take a look at the moving average, I think you'd agree with me, maybe you won't, but that 18-day average is what the market rallied back to figure out what to do on when it was up here. It fell back to it, and it was playing there, and from there, it's tried to break out to the downside. Now, the support in the market is right here. The lower Bollinger Band comes in at 842.5. I'd expect to see short covering of some size be hitting that market. Doesn't mean I'm right, but that's what I'd look. Why? Because when you hit the 18-day average and you come down with one of these vertical moves, more times than not, the market needs a number that a lot of people look at, and that number is a Bollinger Band. Only 5% of the time do you close outside of the band. That doesn't mean you can't hit it, hang at it, and drop lower, but it's the first zone that I'm looking at for the support. Momentum, this is the other reason. It's oversold. It didn't lock itself into bearishness yet. It's just oversold. So oversold, approaching a support zone on the Bollinger Band. In the meal market, you now have a pattern of lower highs, lower lows. So this whole vertical decline paused. Now, you end this decline if you take out 298.80 here. The problem is you have the embedded reading. You need to lose the embedded reading. In other words, the red line's got to get over 20 to tell me that there's demand for this and the market's going to get a spat of short covering. Why do I say not new buying? Because in my opinion, when you're under the 18-day average, the bias is down. We already know momentum's locked in bearish. So the most you can do is the swing line turning up, but you really need the slow stochastic to lose that reading. Momentum's what this is about. In the soy oil, the market is stuck 3 days now at the 18-day average of closes. Let's assume it drops further. Then I'm looking for the 26.25 level, the lower Bollinger Band. I think the market's going to be stuck in this range for the near term. In the corn market, bearish with an embedded reading. Still down. Even when you hit it, this is what could happen in beans. You hit it, you bounce away, but you're still not going anywhere. That would not surprise me. In the wheat market, a collapse in price. You've just gone from 564 and practically down 40 cents just like that, and you stepped out of the trend. You no longer have an uptrend. You got a higher high, lower low, oversold, hit the Bollinger Band, got under it today. I wouldn't be surprised if the next day or two it tries to get back in it. In the sugar market, an oversold market that doesn't want to lock in that embedded reading. I think it's untradeable right here. Oversold is not a reason to buy a market, and there's no reason to go short it without that embedded reading. And as I told you, I thought coffee was going to punish traders, and I think I've been proven right. You go up, you don't have no follow through. You come down, a break low, you get spun right back. You're just hanging at that 18-day average, and you're going either side of it trying to catch a breakout, or the traders are, and they're not able to push it yet one way or the other. In the cattle market, today was interesting. You have now the higher lows, higher highs. You got right to that number where I told you this market could have a problem. The 18-day average, that line in the sand. Did you take out 89 and a quarter the last high? No. So the pros, what did they do? I don't know. Because the swing line's up, that's the short-term trend, and the bias is down, I don't know that they did anything. I think it just went back to neutral area here, and it's sort of stuck. If you take out 89 and a quarter, you confirm what? That's what I don't know. It doesn't confirm anything. You really got to close over 87.45 to get bullish. And even then, I tell you, what are you going to do? Put a stop from there, 700 points lower? Untradeable market as far as I'm concerned. In the hogs, at least here, I have the embedded reading. So I'm still very bearish, still looking until that ends for prices to drop. You're at contract lows. You could end up Friday at even lower lows, which means the whole open interest, everybody long, would be going home with a loss in theory, or just about everybody. So we'll look to see what that market does at the end. We'll see if the stock market can hang in. It's going to be an interesting evening, that much I can tell you. I'm Ira Epstein. You have a great day, and I'll talk to you all first thing in the morning.